Good morning, everyone. Today we're diving into a topic that pops up every morning in the financial world, but often leaves people scratching their heads. Let's break down stock futures, those early morning headlines you hear before the market opens, and the numbers that set the tone for the trading day ahead. Stock futures are contracts to buy or sell a bundle of stocks, like the S&P 500, at a set price on a future date. They're agreements made today, but settled later, allowing investors to lock in prices and manage risk. Think of them as a bet on where the market is headed, giving us a sneak peek at investor mood before trading begins. They're like a crystal ball, hinting at how the day might unfold. If futures are up, traders are optimistic. If they're down, there's caution in the air. These movements can influence how investors and traders prepare for the day. This pre-market activity is driven by overnight news and anticipation of what's coming. Global events, earnings reports, or political changes can all move futures before the sun rises. It's like checking the weather before you leave the house. Futures give us a sense of the market's direction, helping investors decide whether to bring an umbrella or sunglasses. You don't need to be an expert. Just know that these early moves reflect how investors are feeling about the day ahead. Even if you're not trading, futures can impact your investments and retirement accounts. So, when you hear stock futures dip, it means investors are bracing for a potentially rough start. It's a signal to pay attention, as the day's trading could be more volatile than usual. Now, what actually moves these futures? Two things: economic data and company news. Economic data, like jobs reports or inflation numbers, give a snapshot of the country's financial health. Company news, especially earnings reports, shows how individual businesses are performing. A few big companies can sway the entire market with their results. On any given morning, traders are waiting for these reports, trying to predict whether the news will be good or bad. The anticipation drives futures up or down as traders place their bets. If a major economic report or a tech giant's earnings are due, expect extra drama in the futures market. That's why you'll hear the market is in a holding pattern before big announcements. Everyone's waiting for the next clue to decide whether to buy, sell, or hold. Futures are the market's way of reacting to news before it's official. Why does so much action happen before the market even opens? The answer lies in the world of futures trading, where every tick and headline can spark a reaction before most people have had their morning coffee. It's all about staying ahead of the curve and managing risk. Traders and investors are constantly reacting to rumors, predictions, and overnight news from around the globe, trying to profit or protect themselves before the official trading day begins. Global events, economic data releases, and even political developments can all move futures markets in the early hours. If optimism is high about an upcoming earnings report or economic announcement, futures tend to rise. If anxiety or uncertainty takes over, they fall. These moves can be sharp and sudden, reflecting the mood of the market before the opening bell. It's a bit like racers inching toward a rumored shortcut. Some are willing to take the risk for a potential reward, while others prefer to play it safe and wait for more information. Each trader's decision adds to the pre-market story. These early moves act as a real-time poll of investor sentiment. Professional traders and institutions analyze every detail, from global headlines to economic indicators, making quick decisions that ripple through the market and influence others. The result? Futures tick up or down, reflecting the collective hopes, fears, and expectations of investors worldwide. This pre-market window is crucial for setting the tone and direction for the entire trading day ahead. It's not an exact science, but it's the best early indicator we have. Futures show us how investors are positioning themselves for what's next, offering a glimpse into the market's mindset before the opening bell rings. The opening bell is just the start. The real action, the anticipation, and the strategy all begin long before the market officially opens for the day. Let's focus on a key economic report, the Consumer Price Index, or CPI. CPI measures inflation, how much prices for everyday goods and services are rising. When CPI goes up, our cost of living increases. When it's steady or down, inflation is under control. Wall Street watches CPI closely because it influences Federal Reserve decisions on interest rates. High inflation can lead to higher rates, which usually hurts stocks. If CPI shows inflation is cooling, that's good news for the market. On CPI release days, futures often swing wildly as traders react to expectations and surprises. A better-than-expected CPI can spark a rally. A bad number can trigger a sell-off. Futures are especially sensitive to this report, as it sets the tone for the day. CPI is a single number with the power to move the entire market. Now, let's talk about company earnings, the market's report cards. Big names like Apple, Tesla, and Meta reveal their sales and profits several times a year. Analysts predict these numbers in advance, but surprises, good or bad, move stocks fast. Beating expectations can send a stock soaring. Missing them can cause a sharp drop. Even more important is guidance, what companies say about the future. Strong guidance can lift the whole market, while warnings can drag it down. Most big companies report after the market closes, so futures react overnight and pre-market. A blockbuster report from a giant can boost futures for the entire S&P 500 or Nasdaq. A disappointing result can trigger a wave of caution before the opening bell. Earnings season is when futures come alive with every new headline. Let's see how one company, like Apple, can move the whole market. Apple's results matter because it's a huge part of major indexes. When Apple reports earnings, everyone pays attention, not just Apple shareholders. Before the report, rumors and analyst upgrades or downgrades can nudge futures up or down. If Apple crushes expectations and gives strong guidance, its stock surges, and so do S&P 500 and Nasdaq futures. That optimism spreads, signaling strong consumer demand and tech innovation. But if Apple disappoints, warning of weak sales or supply issues, its stock can tumble. That fear ripples out, dragging down futures for the whole market. Investors worry. If Apple's struggling, maybe others are too. One company's news can set the tone for everyone, turning futures sharply positive or negative. That's the power of a market heavyweight. Apple's report card can make or break the day's mood. Tesla is another great example of anticipation driving futures. Investors care as much about Tesla's future promises as today's results. Before Tesla's production numbers drop, futures for the tech-heavy Nasdaq can swing wildly. Positive rumors about deliveries can lift futures. Negative news can drag them down. If Tesla beats expectations, its stock surges and boosts the whole sector. That optimism can lift Nasdaq futures, signaling risk-on sentiment. But if Tesla misses, disappointment spreads fast. Investors worry about consumer demand and the broader economy. Futures dip as traders brace for a tough open. Tesla's news shows how one company's results can electrify, or shock, the entire market. So, what does it mean when you hear US stock futures dip on a Monday morning? For many, it's a signal that the day ahead could be unpredictable, and that the mood on Wall Street is already shifting before the opening bell even rings. It signals early caution. Traders are selling more futures than buying, pushing projected opening prices down. This activity is like a weather forecast for the market, hinting at possible storms or clear skies ahead. This mood is often tied to big news on the calendar, like a CPI report or the start of earnings season. Traders scan for any clue that could move the market, knowing that even a single data point can shift expectations. Futures reflect collective anxiety about inflation or disappointing company results. When inflation numbers come in higher than expected, or a major company misses earnings, it can send ripples of concern through the market. Think of the futures market as a real-time poll of investor sentiment, constantly updating with every new headline. It's a living snapshot of how investors feel about the risks and opportunities ahead. A rising futures number means optimism. A dip means caution. These numbers are like the pulse of the market, beating faster or slower, depending on the latest news and rumors. But this can change quickly. News from overseas or a surprise report can flip the mood in minutes. A sudden development in Europe or Asia can send shockwaves through US futures, forcing traders to rethink their strategies on the fly. The pre-market is a time of rapid positioning as traders try to solve the day's puzzle. Every second counts, and decisions made now can set the tone for the entire trading session. By the time the market opens, everything could look different. Overnight events, breaking news, or a sudden shift in sentiment can completely rewrite the day's script. Futures give us a preview, but the real story unfolds throughout the day. The opening bell is just the beginning, and every moment after brings new twists to the market's unfolding drama. As we wrap up, remember, stock futures are a helpful guide, not a guarantee. They offer a real-time glimpse of market expectations and help us prepare for volatility. But futures aren't a crystal ball. The market can reverse course minutes after the open. Sometimes traders fade the open, buying when futures look weak, betting on a rebound. Futures reflect early sentiment, but once the full market joins in, everything can change. When you hear futures dip, you'll know it's about investor caution ahead of big news. But it's just the first chapter. The rest of the day is unwritten. Watching futures is smart, but it's only one tool for understanding the market. Stay curious, stay informed, and remember, the market story is always evolving. Thanks for joining us. Have a great day.